Thank you very much. Hello scholars. Today we are going to discuss about index. We are discussing exchange traded funds which invest into the index. So to understand ETF or exchange traded fund, you need to understand what is index. Now I'll try to explain in a very simple language what is an index. The simplest and easiest way to remember index is a list of stock. There are 500 stocks in a NSE BSE, and those are of different sizes, different sectors. So stock exchange collect some stock based on certain criteria and make a list. And why this index is needed? Because index serves multiple functions or purposes. The most important function is to economical indicator, the way inflation, price, inflation or interest rate, GDP. Similarly, the index performance is one of the economical indicator. It index tells us what are the overall market prices. Okay, because every day there is some news, some positive news about some company, negative news about other company, and prices of each stock fluctuate. To neutralize all this company specific information and to gauge the overall general economical condition or overall market sentiments or the prices, index is required. Now index, there are multiple types of index that we are going to discuss. Other use is to check the performance of the actively mutual funds as a benchmark. So index help us to gauge the performance of actively managed funds, and this is the benchmark for that actively managed funds. And the most important for us here is exchange traded funds follows the index. They try to replicate the index. They will make invest into the same stock as that of index in a same proportion. So fund manager has nothing to do with the research. They will just do follow whatever the index. How index is calculated? Now this is a simplified definition of index. I am going to show how it is calculated. Let's go and check. Now this is a Nifty 50 index. So this is the list of 50 stocks, and these are based on the market capitalization. That means top 50 companies in India which are listed on the stock exchange. It's considered for as a Nifty 50 index. Okay, how it is calculated? So first stock exchange make a list based on certain criteria, and here they will take the free float market capitalization. So what is free float market capitalization? Let's say Reliance has approximately, let's say 700 crore shares. Okay, or we'll check the how much shares in Reliance. Let's go and check. Reliance must be here. Okay, I'll show actual directly on the website only. So understand first the concept of market capitalization and then free float market capitalization. So let us this check the Reliance. Reliance industry share price is 1380. Okay, now the Reliance has some shares. Okay, how many shares? This is a total market capitalization. So you understand total market capitalization is equal to share price multiplied by total shares. Okay, so I'll just calculate over here. So this is price. Okay, and I'll take the total market capitalization, which is already calculated by the National Stock Exchange. First, I'll explain what is total market capitalization. This is total market capitalization, and the price was 1380. So number of shares will, okay. So these are the number of shares. This number is in crores, 1,354 crores shares. So market capitalization, you can write down market capitalization. This is very important concept in investing, without which you cannot capitalize. you cannot understand the mutual funds, ETF, and even stock market. Is the price of shares multiplied by number of shares. Here price was 1300 price per share, and number of shares is this. And you can multiply and you get the total market capitalization. Okay, this is here. But all these shares, 1354 crores shares, are not freely traded. That means some the shares are held by the promoters for Ambani family and their alliance associates. Those are not free. So how many shares are free? Let's take the number of shares. First, free float capitalization here. So this is free float. These are the free shares. And then how many will be the free shares? Okay. So these are the free shares. Free shares means these are free, not just freely traded shares. We should not say freely, otherwise we will consider free of cost. These are freely traded. These are total shares. 1354 is a total shares, and these are freely traded. That means beyond promoter and Ambani family. And to calculate free float market capitalization, you have to take the free shares, number of free shares, multiply by the share price here. Okay. Now let's calculate free shares. How many free shares were there? Price is current price, and free shares, I'll take this number. Free shares means free float shares. And this calculate number of free shares and price. So this is market capitalization, 9.3 lakh crore. Okay, so you understood the concept of free float market capitalization and total market cap. This is given on the NSE India website. So total market capitalization of Reliance is almost 18 lakh crore, and free float is 50%, that is 9 lakh crore. That means 50% shares are traded freely, rest are held by the money family. So to calculate the index, this free float is considered. Okay, you may ask why free float, why not total? Because totals are not easily available for trading. So whatever they are available for trading is calculated. So here HDFC Bank's share price is this, number of shares, free shares, and this is a free float market capitalization. So stock exchange will take the free float market capitalization of all 50 companies and do the addition. And this will be the total free float market capitalization of all 50 companies. This number is huge. It's in a crore. It will go into lakh and crores. Okay. So first step is to take the free float market capital total free float market capitalization of all 50 companies, and then there is a divisor. Now this divisor is a secret formula of National Stock Exchange. They don't tell anyone else. This is their copyright. In fact, I asked the person who created this index, because I attended the courses of the NSC people themselves. He did not tell us. He said, no, that is a secret formula. Divisor, we can't tell it. But whatever available in public domain is this. Okay. So we can retrospectively find out divisor by directly Nifty. What NSC tells us, Nifty directly, index. And this is available in public domain. Then I calculate divisor retrospectively. Now this divisor is based on the base market capitalization when index was started. Then there are certain adjustment when promoters issued fresh shares or new companies to add it to the index. Previous is removed. That there are a lot of activities going on. So that's why this divisor is their copyright, and they make huge amount from this making the index. For us, it is not important. For us, what is important are 3 points. Okay, what are those 3 points? Index is depend upon prices of shares. That is first. Second, it is depend upon number of free shares. Okay. So, and some divisor, which is secret formula. We don't know that. These are the 3 things. Now you can guess how this share price can increase, how index can go up. Answer is very easy. Share price will increase. or number of shares can increase. Okay. Most of the people are aware that index can be increased by increasing share prices, but very few people are aware that index can increase by increasing number of shares as well. Okay. Although this divisor will take care of to adjust this effect. For example, suppose now this Adani enterprise. These are the number of free shares as of now. If Adani issue additional shares, let's take additional, okay. So what will be the his total free float? These are the free floating shares, and then his market capitalization will be this multiplied by share price. Can see that if they sell another some shares, so now this is theoretically possible. But they can see that from 65 to 67, free float market capitalization can be increased by increasing number of shares. It means even if Adani Enterprises remains price remains the same, free float market capitalization go up by increasing number of shares. Correct? And this is what exactly Zomato does. Zomato sells shares every year since the beginning only. And where is now Zomato? Now it is called as Eternal. Where is the Eternal? Eternal. Now this Eternal is Zomato company. Now you can see it has become top 14th. 14वें number पे आ गई. And it is not making profit as well. They are just in selling the shares, increasing the market cap, and they are gone up to 14th number. Now you may ask, why NSE will allow to increase the free float market capitalization? So what NSE will do, NSE will change some numbers here, adjust some divisor, and then that will nullify the effect. Okay. So that index cannot be manipulated significantly by just changing number of shares. Then I grilled the speaker or lecturer who was giving us talk. How frequent NSE changes the divisor? He again told it is not in public domain. But then I asked, is it changed daily? He said, no, it is not changed daily. That was clear. It means promoter, and there is some significance as well. Let's say promoter sold only small amount of shares, just 1,000 shares. NSE will not change the divisor. So increasing shares, number of shares slowly over the period of time, automatically free float market capitalization go up, even price remains the same. You don't have to go into that technical details. What you have to go understand is that sometime when you buy shares, even you replicate your buy shares in your portfolio size remains the less, but index goes up. You may wonder why I have bought exactly the shares like the Nifty, but why my portfolio is not increasing like Nifty? Because of this. Why? Number of shares in Nifty free flow shares can increase. So even if your prices are not increasing, it can go up. However, there is not the promoter cannot sell unlimited, because NSE will again do the adjustment divisor, and it will Nifty will get into normal things. There are many complicated things to understand in a index, but that will be beyond our discussion. So what are the types of indices? Okay, there are many indices, maybe 200 or 300. At least 200 indices are there. All are not important. So in under the equity class, we have broad market index, sector index, strategy index, thematic index. Under the debt, there are duration based bond duration based index, maybe other indices like whether government or private bonds and so on. Let's show how many indices are there. So this is again another website of NSE only, Nifty indices. Okay. And let's see this. If you click on indices and go equity, so these are the broad based indices. What does it mean? Broad based index means it is based on the size of the company. Okay, so that's where you see that top 50, top 100, top 200, mid cap, small cap, large mid cap. So these are based on the size of the company. Okay. Next in category of index is sectoral indices. That means this Nifty Auto will have only companies of automobile. This will have Nifty Bank will have this index will have only bank companies. So there you can say almost 15, 20 are sectoral indices. In a broad indices, all sectors are involved. All type of goods and products is involved. In sector, specific sector. Then there are thematic. These are fancy indices. I think you should not go as of now. And strategy indices. Okay. When you become active investor and know little more about market, then you can go for thematic, sectoral, and this. But for you as a average, you go strictly remain only for the broad base, because if you know too much, then you will have to, you can invest anywhere. But for our aim is to teach for the average investors, so broad based indices. Again, then there are date indices. You can see government security index, SGB index, corporate index. So many indices created. As I said, see, there are hundreds of index, at least 200 index. Now you will get confused. So we wanted to make investing simple, and here life has become again complicated. So you should not worry. That's what we are doing. My aim is to just to make teach relevant points only, not a theory, entire theory. So for average investor, broad market index based based on the Nifty 50. Let's write it down. Nifty 50. Then next 50, it is called as next 50. That means stocks from 51 to 100. Then top 100, top 200, top 250, top 500. That's it. Like this only. Or mid cap index, which will or small cap index. So these are the only necessary indices for you. Okay. For parking of the funds, let's say liquid case or liquid funds. There are liquid funds, those are also ETFs. That's it. You don't have to learn all 200 indices. What you have to learn is only broad market index, because the investing, there are three goals. What are those? Parking of the funds for short term, then protection of the funds for from the inflation, and then growth. Okay. For growth, this is more than enough. Broad market indices are more than enough. You don't have to go into strategy. That will be for advanced people. Okay. For parking of the funds, liquid case is a choice for the ETF, in the ETF. For the growth, there are multiple ETFs. For protection, there is not there are not many ETFs available. Okay. Now let's see what are the ETFs. Till this time, I was discussing about indices, index. Now let's go about and find out the ETFs available. You should go here, market data. This is NSE India website, and select ETF. Okay. There are more than 200 indices, where if you click on the value here, you will see the most active index. Nowadays, silver and gold bees are running like Ferrari or Formula One. They are so, people are buying in a huge quantity, huge. Yesterday, I showed you how the premium. So these are tracking the index, silver index, gold index. But here is Nifty bees. That is what I was talking. This is used for the growth and wealth creation. Which one? Write down. Nifty bees, it track Nifty 50 index, top 50 companies. That means if you buy one unit of Nifty bees, you are investing in all companies, 50 companies. You don't have to study which companies are there. Then there is a junior bees as well. Next 50, it is called a junior bees. Okay, let's click here so that I can find it. Nifty Bs is for top 50 companies, and Junior Bs is for the next 50 company. Let me find where it is. On broker, you can just find it in a single. Yeah, this Junior Bs. Okay, this is this track next 50. Okay, so Nifty Bs, Junior Bs. That means you are investing in first 50, next 50. These two are there. Then there is one liquid base as well. Liquid base, don't invest in liquid base. Liquid case. Let's go again top. So this liquidity, liquidity means how much volume. There should be high volume. Then it will become easy to trade. So liquid case. Okay, so this is another ETF. Okay, and it track the index 1 day rate liquid. This is the index for the liquid case. Okay, today's video was about index, how it is created, who creates it, what is a practical application, and which are the types of different indices. Okay, what I suggest you explore this website. This is NSE India website. Then there is a passive Nifty indices, niftyindices.com, and there was one passive index as well. If you search on the Google passive India passive funds, you get the this also NSE. There are three websites, and search on Google. It is not difficult. So India passive funds, niftyindices.com, and NSE India. These all three are NSE only, but they are created separate just for the information purpose. Okay, so explore these three website, and there is some more information as well. So you will be acquainted with the ETF and indices. But be aware, this is broad market index is more than enough. Do not go this ETF till you get the experience and if you know market in depth. Okay. All right. Thank you very much.